on a quarterly basis for future tax periods, unless the said registered person disqualified from opting QRMP scheme. That is, if his annual aggregate turnover exceeds ₹5 crores during the current financial year or during that quarter, he will be disqualified, and he will not be eligible to file his returns on quarterly basis. He has to opt for monthly return filing. And where the registered person voluntarily opts for monthly return filing also, a registered person shall not be eligible to opt for furnishing quarterly return in case the last return due on the date of exercising such option has not been furnished. This I have already discussed with you. That is, on the date of opting for the QRMP scheme, no returns, no previous return should be pending as on the date. Only in such cases, a registered person shall be eligible to opt for QRMP scheme. A person who's opting, who opts to file GSTR-1 on a monthly basis shall opt for monthly filing on the common portal from the first month of the quarter succeeding the quarter during which his aggregate turnover exceeded ₹5 crores. Here, next, we'll discuss about the monthly return filers. Every registered person whose aggregate turnover exceeds 5 crores shall furnish GSTR-1 electronically on monthly basis. This GSTR-1 covers all kinds of outward supplies effected during the period by such a registered person. And by filing the GSTR-1, the registered person declares his output tax liabilities for the respective month. This ensures transparency and statutory compliance of the registered person, which also reduces mismatches mismatches between the books and returns, and reduces the future litigation risk if upon filing the registered person should have reconciled the turnover between the books and the returns declared in the returns, sales declared in the returns. And let's discuss in deep about the contents of the GSTR-1 form and what are its precautions, precautionary measures to be taken before filing GSTR-1, and what are the points that have to be kept in mind regarding the documentation and the errors to be avoided. So table 4A and B denotes the B2B supplies made to the denotes the outward supplies made to the registered persons. So 4A denotes the regular B2B supplies other than reverse charge, other than supplies attracting reverse charge, but includes the supplies made through electronic commerce operator. And table 4B denotes specifically the outward supplies made to the registered person and supplies attracting reverse charge mechanism. And what are the precautionary measures? First, validate the recipient GSTN. The recipient GSTN should be correct and active. And exclude in case of the registered person's aggregate turnover exceeding 5 crore, he must comply with the e-invoice applicability. So in such cases, e-invoice data are auto-populated from the IRP portal to GSTR-1 form. So in that case, the B2B supplies will be auto-populated in table 4A of GSTR-1, which might also include outward taxable supplies and exempted supplies, etc. So before submitting the return, verify the e-invoice data, that is data containing in table 4, and segregate the taxable supplies and exempted supplies separately, and only the taxable supplies, outward taxable supplies, has to be reported in table 4, table 4A. And in case if any exempted supplies has been included, that has to be separately declared in table 8 of GSTR-1. And on monthly basis, the taxpayer needs to reconcile the turnover with e-invoice data and the books. This ensures that no invoices has been missed out in the books of accounts by the registered person, and also in case of any errors or omissions has been occurred, the taxpayer will be informed at the earlier stage and take remedial actions at the very earlier stage. Invoice details. Checking of invoice details is mandatory. That is invoice number, date, and value, especially in cases where invoice is not applicable. And most important thing is verify the HSN code and the tax rate. HSN code must align with the nature of the goods or services supplied during that period. Any differences in the HSN code leads to the difference in tax rates. So every taxpayer must verify, once again check and verify that only correct HSN codes are declared in GSTR-1. And place of supply needs to be determined correctly, because only a place of supply determines whether the transaction is an interstate or intrastate transaction. Also, table 4A includes the supplies made through electronic commerce operator. That is, ECOs collecting TCS. So in such cases, the registered person has to reconcile the supplies made through the ECO that are maintained in the books and declared in the returns, with the TCS credits received from the electronic commerce operator, which has been reflected in the registered person's taxpayers GST portal upon filing of the GSTR-8 by the e-commerce operators. So this reconciliation helps the taxpayer to accurately account for the transactions and properly declare the supplies in the GSTR-1, which in later period the differences, the litigation in these differences will be avoided. And as supply includes disposal of an asset, as we saw in section 7, so the registered person is required to check other than the normal supplies made the normal course of business. He should also verify whether any capital asset has been sold during that period. If so, that should also be included in GSTR-1. And since GSTR-1 has two separate tables, that is table 4A consists of two parts. That is regular B2B supplies and B2B supplies attracting reverse charge. So the registered person should segregate, in case, if applicable, the registered person should aggregate the normal regular supplies and the supplies attracting reverse charge and declare those supplies in the correct table, that is 4A and 4B. Maintain proper documentation of all outward supplies. This is very crucial because the GST notices widely covers most of the GST notices issued by the department does not impose penalty or determine taxes. They just ask for the clarifications or explanations for the turnover declared by such registered person. In such cases, in such cases, the replies will be given or based on the tax. Based on the documentation, that is to prove the taxable supply, to prove the supplies made by the registered person. So to prove that, proper documentation is necessary. The registered person has to maintain proper documentation, that is with respect to the supplies, invoice or tax invoice or e-invoice, and in case of movement of goods, e-way bill has to be maintained, and that should align with the invoice and turnover declared in the returns, and keep a track of e-way bills and e-invoices generated for outward supplies. Because the department also scrutinizes the turnover declared in e-way bill, turnover reported in e-way bill, and the turnover declared by the registered person in his GSTR-1. So a prior reconciliation of the e-way bill and invoice or e-invoice makes the registered person to mitigate the risk of litigation in the future period. Next, table 6A, B, and C denotes exports made by the registered person. Table 6A denotes exports made by the registered person. Table 6B denotes the SEZ supplies made, and table 6C denotes the deemed exports. So let's see one by one. Table 6A, which consists of details of the export. The taxpayer must differentiate the type of supply. What is an export? What supplies are export and SEZ and deemed supply. So exports. So in case of exports, what type of export is made? That is either with payment or without payment, and the shipping bill details has to be verified with the export invoice generated by the registered person, and the same, the reconciliation of turnover between the books and the return has to be made, has to be mandatorily done by the registered person. And as I said already, the proper documentation is necessary. In case of SEZ supplies, first thing is to verify the GSTN status of the recipient to ensure that such GSTN is registered as an is registered under SEZ zone, falls under the SEZ zone. And ensure that endorsement from the SEZ officer, that proof of authorized operations. This is what the supplies made by the registered person to the SEZ unit or developer. This authorization proves that such goods are used for the authorized operations only. So this only implies that such supplies are made to the SEZ unit. In correct classification, here also SEZ is of two types, either SEZ with payment or without payment. This should be classified correctly and declared in the GST returns. And exports. So 6C, table 6C denotes deemed exports. So what are deemed exports? So deemed exports is the in the deemed exports, goods do not leave India, but and the payment is received in either in Indian rupees or for convertible foreign currencies. What are the so only in so unlike SEZ supplies, deemed exports are made with payment of tax. As we see, or as we saw already, that exports and SEZ supplies are made either with payment or without payment. But in case of deemed exports, only the supplies can be made with payment. And what are the key categories of supplies? The supply. What are all the supplies will be treated as a deemed export only when the goods are supplied against the advance authorization certificate or supply of capital goods to the EPCG license holder, or supply to export oriented unit, or a supply of gold by PSU. Let's have a quick recap of what are all these supplies. So when a supplier provides goods to an exporter holding an advance authorization, when a supplier provides goods to an exporter holding an advance authorization license used for producing export products, that will be treated as an deemed export, because the goods supplied by the taxpayer to the person holding an advance authorization license who is further engaged in the manufacturing of export products. So this good supplied by him is directly used in the manufacture of the export products. So that will be treated as a deemed export. And when the capital goods like machinery are supplied to the business under the EPCG scheme, that is export promotion capital goods, that scheme, and the machinery helps in manufacturing, and the machinery helps in manufacturing goods for export promotion. This will also be treated as a deemed export. When supplies made to the export-oriented units or units under technology or biotech parks, which mainly produce goods or services for exports, and when banks or governments undertaking supply of gold to exporters for making export jewelry. So these are all the categories where the supplies are treated as an deemed export. All these cases, goods remain within India, but the government gives export-related benefits because the supply benefits to the supplier, because the supplies ultimately supports exports or foreign exchange earnings. And form the supplier should be ensured that Form A has been duly submitted by the recipient. Only then it will be so treated as an export supply. This is just a precautionary measure. And in deemed export, there will not be any supply of service. Only supply of goods is treated is covered under the deemed export. In deemed export, verify whether the supply is notified under section. These are all the precautionary measures in deemed exports. Verify the supply is notified under section 147 of the CGST Act. And verify whether the recipient falls under the eligible categories. Confirm goods are in the approved list of the recipient's license or authorization, because only that approved goods when the goods are approved in the authorization license, advanced authorization license, or PCG scheme, that goods will be then only that supply will be treated as an deemed export. And the invoice issued by the supplier must clearly mention that supply meant for deemed export. So in order to identify the goods are moving to for the to be used in the manufacture or for export product. And here also HSN codes must be verified, and the tax rate should align with the HSN code. Both HSN code and tax rate should align with the nature of the goods or service, nature of the goods supplied by the supplier. And in this case, tax charge should not tax should be charged under CGST and SGST head, because in this case the supply the goods does not move out of the out of India, so only CGST and SGST taxes are to be charged. Next, supplies made to unregistered persons. Table 5 and Table 7 denotes the supplies made to the unregistered person. So Table 5 specifically describes the large B2C supplies on with large transactions. That is taxable outward interstate supply, where invoice value is more than 1 lakh. These transactions will be treated as a large transactions when made to the unregistered person. This supply also includes supply made through an electronic commerce operator. So such invoices has to be declared on the invoice wise. Such sales has to be declared. Such has to be declared on invoice wise, and only gross sales, that is credit notes, credit or debit notes issued for against this invoice shall need to be declared separately. Table 7 specifies the supplies made to the unregistered person, that is small transactions with the invoice value less than 1 lakh. So in this table, the taxable supplies made to the B2C, that taxable supplies made to the unregistered person shall be declared state-wise. That is, in case of when supplied to Tamil Nadu, yeah. This is the table of Table 7, which contains the place of supply, taxable value, supply type, and the rate. You can see that supply type and tax columns are locked. So the taxpayer must furnish on the place of supply and the turnover declared turnover made in that respective state. So automatically, if it is place of supply is Tamil Nadu, and automatically the supply type will be locked as intrastate, and only CGST and SGST columns are open, and that is also locked, because after giving the rate of tax, it will the tax amount will be auto calculated by the portal. Table 8, where nil rated, exempted, and non-GST supplies are declared. First of all, the registered person has to understand the nature of nil-rated, exempted, and non-GST supplies, because nil-rated supplies falls under the GST but taxed at 0%, whereas exempt supplies are where exempt supplies are notified as exempt by the GST notifications. And non-GST supplies, these supplies do not fall under the the scope of these are all the out of scope scope of GST. That is, GST is not leviable on these supplies. So these three, nil-rated, exempted, and non-GST supplies, though no tax has been charged in these, but they have a different definitions and the nature of supplies. So the registered person must crucially identify and differentiate these supplies, and categorically declare the respective turnover under the respective heads. This is a summary table where nil-rated, exempted, and non-GST. So nil-rated falls under nil-rated and exempted falls under the scope of GST, whereas non-GST supplies does not cover under the scope of GST, and therefore no taxes levied on such supplies. And tax rate is for nil-rated, it is 0 rated, and exempted, it is exempt through notification. That is, this is completely different from 0 rated supplies. That is nil-rated supplies. And ITC benefit. In all three cases, the registered person shall not claim ITC. In case he has other taxable outward supplies also, the ITC pertaining to both taxable and exempt supply, exempt nullity or non-GST supplies, which are common to both these categories, has to be reversed on a proportionate basis based on the turnover of exempt nullity or non-GST supplies. What are the mandatory checks to be done before submitting the return? Verify whether the classification is proper, that is, whether the actual nil rated supply is declared under head nil rated. Likewise, this has to be verified by the taxpayer, and check whether the goods or services are classified as nil rated, exempted, or non-GST satisfies the condition, if any, in the latest amendment notifications. In case of e-invoice applicable, as I already said, the taxpayer should be very aware to eliminate the exempt or nil rated supplies which are included in table 4A, where the e-invoice data is auto-populated in the GST portal. That should be eliminated from table 4A and to be declared in table 8. When coming to debit note or credit note, so B2B supplies made to the unregistered person, that is B2C small category supplies, separate reporting is required, as such credit note or debit note shall net off and declared with the turnover, table 7. Likewise, nil rated, exempted, and GST where credit notes or debit notes issued in respect of the invoices of nil rated, exempted, or non-GST supplies. These are also these credit notes are also in net off and declared in the table 8 of GSTR-1. In what cases invoice-wise credit notes or debit notes shall be declared? B2B supplies and B2C large-scale transactions, and export with payment, export without payment. So, for what are all the reasons the credit notes shall be issued? Let's see what are the reasons the credit note shall be issued. Section 34, subsection 1 provides that where one or more tax invoices have been issued for supply of any goods or services or both, and the taxable value or the tax charged in the invoice is found to exceed the taxable value or tax payable in respect of such supply, or where the goods are supplied or returned by the recipient, or where the goods or services or both supplied are found to be deficient, or this or where discount referred to in subclause B of subsection 3 of section 15 is given, the registered person who has supplied such goods or services or both may issue to the recipient one or more credit notes for the supplies made in the financial year containing such particulars as may be prescribed. So, as per section 34(1), a registered person shall issue one or more credit notes in respect of the one or more invoices issued in respect of the supplies made by him, only when the taxable value or the tax charged invoice, tax already charged in the tax invoice is found to exceed the actual taxable value or tax to be charged, or where the recipient returns the goods, or where the goods or services supplied by the supplier is found to be deficient. And last, the discount as referred to in section 15 subsection 3 clause B has also been inserted through a recent amendment. Because of this, the credit notes because of this amendment, the credit note shall also be issued to the discounts given by the suppliers as per section 15(3) subsection B. So only for all these five cases, the registered person shall issue credit note. for any the issuance of credit notes for any other reason other than these 5 categories shall not be allowed, and it will be disallowed by the department, because while reporting the credit note or debit note in GSTR-1, there is no such criteria or condition to identify whether such credit note has been issued in accordance with the provisions. So the taxpayer is allowed to file the GSTR-1, but later in future period, the department through notices asks for the clarifications or documentations in respect of the credit notes issued by the registered person. At such times, the registered person has to submit proper documents backed by documents maintained for such credit notes. So while submitting that, the officer, after scrutinizing all the credit notes, he will disallow those credit notes which are issued for the reasons other than the one mentioned in the section. So this will lead to unnecessary tax, interest, and penalty for the registered person. So to avoid these litigation risks, the registered person is advised to issue credit notes only to these following reasons. Issue GST credit notes only to these following reasons. In case the registered person is required to issue credit note here for any other reason, he shall issue a commercial or financial credit notes without GST. So what is the time limit for issuance of credit note? The credit note shall be declared in the month in which such credit notes were issued, but not later than the 30th day of November following the end of the financial year in which such supply was made, or the date of furnishing of annual return, whichever is earlier. So here the credit notes must be issued if the registered person has issued a credit note in the month of April. He shall declare such credit notes in GSTR-1 in the said month, or if he missed such credit note to be declared in the returns, he shall be given time up to 30th November of the next financial year. Next financial year. Beyond that, he shall not issue or declare such credit notes, so which will be disallowed later. And with respect to debit, Section 34 provides, Section 34 subsection 3 provides for the issuance of debit notes, where one or more tax invoices have been issued for supply of any goods or services or both, and the taxable value and the tax charged in that invoice is found to be less than the taxable value or tax payable in respect of such supply, the registered person who has supplied such goods or services or both shall issue to the recipient one or more debit notes for supplies made in the financial year containing such particulars as may be prescribed. So this provision reads that when a registered person has issued one or more tax invoices and in respect of these outward supplies, and when on the taxable value and the tax charge in the tax invoice is found to be less than the tax already is found to be less than the taxable value or tax to be charged in respect of the said supplies, he shall issue a debit note. Debit note in this regard, and the time limit to issue the such debit notes is to be declared. That is, if he issues debit note in the month of April, it shall be declared in the respective month's return. And what are the checkpoints to be considered before filing? Both debit note and credit note issued by the supplier has to be declared in Table 9B. Table 9B denotes the issuance of debit notes and credit notes. Line B also consists of two parts. That is debit notes and credit notes issued to the registered person and to the unregistered person. So the registered taxpayer has to carefully verify the details mentioned in the table and proper and declare the correct amounts in the respective heads. So when the table which contains the debit notes or credit notes issued for the unregistered person, the type is categorized as B2CL, exports with payment, without payment. So the taxpayer must cautiously select the appropriate type of debit notes and report the details accordingly. So errors in any of any clerical error in this may lead to the litigations. And coming to the amendments through filing GSTR-1. First, before starting, earlier before GSTR, before implementation of Form GSTR-1, amendment, any clerical error or omission, any changes in the taxable supplies declared in GSTR-1 has to be amended or changed in the next month's GSTR-1 through table 9. Yeah. So this resulted in the liability mismatch between GSTR-1 and 3B in respect of the supplier. So here, no form GSTR-1A has been implemented, where GSTR-1A is used to add, amend, or change sales invoice details in GSTR-1 that has already been filed for a specific month. That is, and the time window for filing this GSTR-1A is between after filing GSTR-1 but before filing GSTR-3B. That is, if a registered person, if a taxpayer filed the GSTR-1 on the 11th of the subsequent month, and he has time till 20th, which is the due date for filing GSTR-3B. Till this, in between this period, he shall, in case if he finds any error or omission or any addition to be made to the GSTR-1 details, he shall use form GSTR-1A and make all these changes before filing GSTR-3B. This will result in the accurate tax declaration of tax liabilities in GSTR-3B. But one important thing to be noted is there is no restricted time limit to submit to GSTR-1A. So anytime he can, supplier, anytime before filing GSTR-3B, he can file GSTR-1A, that is before 20th of the subsequent month. In such cases, the GSTR, the details amended in GSTR-1A will be communicated to the recipient in the subsequent months GSTR-2B, because as we all know that GSTR-2A is a dynamic statement that will be that will keep updated whenever the supplier amends or updates the invoices through GSTR-1 or 1A. But since the recipient is allowed to claim ITZ only based on the invoices reflected in GSTR-2B, which is a very static statement. So this amendment, the amendment made by the registered person in GSTR-1A will get reflected only in the next month's GSTR-2B of the recipient. So this resulted in delay in claim recipient's input tax credit claim. So the registered person should be very careful and cautious in filing GSTR-1 and try to reduce the any amendments or additions to GSTR-1A, because of this action, the recipient will be delayed in claiming his eligible input tax credit. So this is the stage-wise communication flow. That is, if the supplier files GSTR-1, as I already said, the recipient can view supplier's invoices in GSTR-2A, which is a dynamic statement, and the recipient takes action in IMS, which is currently in use. He may accept, reject, or keep pending such invoices. And second stage, when the supplier amends the GSTR turnover details or like outward supply details in GSTR-1A, such the supplier corrects errors in GSTR-1A before filing GSTR-3B. So this amended details updates the recipient's GSTR-2A dynamically at the stage itself, but GSTR-2B of the recipient is not yet updated. This will get updated in the next month's DB, as I already said. So once the supplier files GSTR-3B, the GSTR-1A amendments gets frozen and finalized. Will not be rectified later, or there will not be any changes to GSTR-1A. The corrected invoice details then reflect in the recipient's next month GSTR-2B. So only after this, the recipient can claim the correct ITC in their GSTR-3B. So the key rule, IMS interactions after GSTR-1A. If the recipient has already accepted an invoice in IMS before the supplier amended it in GSTR-1A, the amendment will reappear in IMS for the recipient to act upon again. So if the recipient must re-accept or reject the amended invoice. In case if the recipient has not yet acted on the invoice on the IMS, so such invoice will automatically get amended and replace the original invoice in the IMS portal. So the recipient acts on the corrected version directly. And these are the other amendments in GSTR-1 filing from financial year 26-27. Fresh document series, as we all know that from 1st April 2026, every registered person must issue a invoice starting on the fresh document series. That is, invoice number should start from the first number. So then 3-year permanent filing lock. That is, the registered person cannot file GSTR-1 more than 3 years from the date of its original date. That is, from 2026, the portal permanently blocks this these older returns. That is, for example, March 2023 GSTR-1 could only be filed until April 11, 2026. That is only till filing of March 2026 GSTR-1. So from 2026, this 3-year period gets permanently blocked in the portal. And non-compliance of e-invoice. There are cases in some situations the taxpayer cannot generate e-invoice. In such cases, where e-invoice is applicable to the taxpayer, if he does not comply with the e-invoice, any invoice generated by such taxpayer is treated as invalid, and the ITC cannot be passed on to the recipient. Day time limit for reporting. As we all know that e-invoice compliance is applicable to the registered person whose aggregate turnover in a preceding financial year exceeds ₹5 crores. So there is a relaxation for generating e-invoice for the persons whose aggregate annual turnover is 10 crores and above. They shall generate the e-invoice within 30 days of the original supply. Yeah. So here, such taxpayers has been given a 30-day period to generate the invoice on the IRP portal. One more important amendment to be noted is HSN. That is HSN of the supplies declared has become mandatory, and the documents issued, that is in table 13, the registered person is required to mention the documents, a number of documents issued, and the invoice series from which series to which series, that should be declared in table 13. And now the table 12 and table 13 has become mandatory. What are the consequences of non-filing and delayed filing? If the return is not furnished, the registered person is restricted from declaring the subsequent period's return only after declaring the previous month's return. He will be allowed to submit the subsequent month's return. This will lead to give exposure to scrutiny proceedings also. And in case of delayed filing of return, in case of late filing, that is, if the registered person files the GSTR-1 after the due date for filing, the late fee shall be generated of rupees 100 for every day of delay. That is, GSTR-1 portal does not automatically calculates or determines the or is not a statement where the tax liability to be discharged. Only in GSTR-3B, the taxpayers are allowed can make the payment. But what if the GSTR-1 has been filed in delay after due date? At the time of GSTR-1 filing, it will not get auto-calculated, but in later period, upon scrutiny by the department, the officers will identify the number of days delay, and they will impose a late fee. According to the number of days of delay. So the registered person must ensure that his GSTR-1 file should be filed within the due date to ensure the compliance with the act. And the maximum amount of late fee shall be 5,000. And also, apart from late fee, interest on the late reporting of invoices shall also be levied on the registered taxpayer. So, in order to avoid all these future litigation proceedings, the registered person is advised to file their GSTR-1 within the due date. So, in essence, GSTR return filing has moved from the self-reported, loosely validated system to a real-time, portal-controlled and two-party verified compliance framework. Thank you all the participants. In case of any queries or if you have any questions, kindly put it on the chat box. We will be replying to this. Deepak Gowda sir has asked, can we add manually B2B invoices and what are the precautions we need to check? Yes, sir, we can manually add the B2B invoices in table 4A, and the before furnishing such details, you need to verify whether the invoice details and the quantities supplied and the taxable value, HSN rate, and the tax rate is aligned with the supplies. Based on this, you can submit the returns. Sir, Ravi Kumar Venkatraman sir has asked, sir, you have mentioned that high C sales or sale of duty scripts. Sir, please clarify whether you are asking for the nature of supply of these two items. If so, the high C sales is a non-taxable supply, and the sale of duty scripts is exempted through a exempted notification, sir. So thank you. Srinivasan sir, you have mentioned land sales under which category will fall. So land sales is generally non-GST supply, and you have mentioned whether any Rule 41 is applicable. Sir, please clarify uh, uh, whether you have mentioned the correct rule, because Rule 42 is meant for the common credit reversal. In such case, common credit reversal is applicable, sir. Sir Michael, sir, is solar power supply to be declared as non-GST or exempted supply? Sir, it is exempted supply as per the notification 12/2017, sir. Uh, Karthikeyan sir has asked to clarify where export-free samples should be reported in GSTR-1. Sir, this is not treated as a supply, as there is no consideration in this case, sir. So, but in respect of ITC reversal, it should be reversal, because the uh, the goods given as a free samples has ITZ part in it, and that should be, and that is blocked as per section 17(5) of this GST Act. So it should be reversed in GSTR 3B. Surya Narayanan sir, we will be sharing a PPT. You will receive it. Generally, for supply of service, e-waybill generation is not mandatory. But in cases where the supply of services accompanied with the goods, uh, in such situation, the e-waybill has to be generated. For example, uh, if the person is providing repair services to the machinery, and the machinery has to be taken from the place of the recipient, in such case, e-waybill has to be generated under the cover of the delivery charges. Mohan and Nair, sir, you have asked, is HSN mandatory for dealers whose turnover is below 2 crores, who's having only B2C sales? So, sir, actually, whose turnover is the person with turnover below 5 crores has to mention the 4-digit HSN, and with above more than 5 crores, 6-digit HSN have to be mentioned, sir. Shiraj, sir, you have asked, I missed issuing invoice 30 days time limit. What can I do now? Sir, if you have missed generating the invoice within 30 days, actually, the turnover, the person with turnover below 10 crore has to immediately generate invoice at the time of generating tax invoice. Only for the persons with turnover more than 10 crore, there has been given 30 days time limit. So, in case you have failed to generate invoice within the time limit, it shall be kept as it's because we can in later period, if the department has raised any issues regarding this, it shall be submitted that the said transaction is very genuine, and uh, and so sorry, sir. In case if you fail to generate the invoice within the given time limit, it is better to leave that issue as it's because in future, if any notice has been issued, explanation has to be given on the same based on the genuineness of the transactions, and in case if any penalty raised in this regard, it has to be complied with.
Okay, next.
So, Sir, you have asked where to show supplies by SEZ units to merchant exporter at 0.1% supplies in B2B or as deemed export or else. Sir, the supply, any supply from SEZ unit to merchant exporter is treated as a supply, is treated as an import of service, sir. So, sir, it will be treated as an import, and it shall has no effect in the GSTR-1 forms. Ma'am, Vijay Lakshmi Selvaraj, ma'am. You have asked few suppliers file late filing, so we are putting their bills on hold for payment, though they fall under MSME. Is that right or wrong? Ma'am, in so you are asking from income tax point of view. It is our responsibility to clear the bills, ma'am. So in case of MSME, that is within the time limit within 15 or 45 days. So in this situation, which you have asked, you can raise a dispute against the supplier through mail communication, which will be considered in the Income Tax Act for the payment period, ma'am. So in this way, you can settle the dispute. Vijay Shankar, sir, what is the procedure to withdraw from 14A registration and come back to normal registration, and what is the time limit? Sir, if the registered person's output tax liabilities has exceeded 2.5 lakh in a month, in that case, within 30 days, he shall opt for the regular scheme and come back to the normal registrations. Shivappa, sir. You have asked is necessary for quoting HSN code for B2C transaction. Sir, for declaring the B2C transaction, we need not submit the details on invoice wise, but in HSN summary, we need to quote the HSN code, sir. Jay Chandra ma'am, you have asked, is there any single HSN code for departmental store and medical store business, or should mention all the 1,000 and above product wise HSN? Ma'am, in HSN summary, we need to declare all the in our portal, in our ERP accounting system, it should be HSN should be integrated with product wise, and it is better to declare those HSNs in the HSN summary. Avanita ma'am, yes ma'am, GSTR-1 late filing penalty will be identified only during scrutiny, ma'am. Yeah, this is right. Karthikeyan sir, IRN generated with payment of GST, but shipping will file export under GST, under LUD. In this situation, can amend the GST invoice in the next month on the portal. Yes, you can amend the invoice on the next month. Sankaran sir, sir, the debit notes or credit notes should be declared in the October month's return, sir. And also, if the October month's return is not filed within due date and it has to be filed beyond due date, it shall be declared within 30th of November. So that is that October month's return should be filed before 30th of November. In such cases, debit notes or credit notes is allowed. We thank you all the participants and your active participation in the Q&A session. We also expect this active participation in our subsequent webinars also. Thank you. Thank you.